All right, Alpha fam, let's do a quick market update. Before we begin, I do want to say that nothing in this video is financial advice. Everything in this video is for educational purposes only. This is just my own analysis on the market. Also, if you're a new time viewer to this channel, if you can please like, comment, and subscribe, we really do appreciate all of the help. Now let's get into this market, guys. Needless to say, everybody got a wide awakening last night. So futures market open. This is essentially what happened, guys. Futures market opened last night. You can see it was at 6 o'clock. Soon as the Asian market opened, let me show you guys a real quick indicator. You can look at these different sessions. It's called FX market sessions. You can click on that and it shows you which market was the one that dumped us last night. It was the Asian market. Why? This. So basically what's occurred is the 10-year government bonds in Japan have surged to the highest level, and the last time that they were here was in 2008 before the financial crisis. So I'll give you guys a quick breakdown on why this has been such a issue for this market. All right. First and foremost, guys, back last year, I think it was probably 100% one of the scariest liquidation events I ever been through in crypto was the Japan carry trade unraveling. It was back over here on August 5th last year. This was the wick of it. And during this week right here, guys, it got bad. Bitcoin dropped 30%. It did it within like 7 or 8 days. Most alts went down 60-70% during this time. It was a very nasty liquidation event. And before October 10th, this was the largest liquidation event that we've ever had. With that being said, what's happening is the fears of the Japan carry trade coming back have become a big topic, because basically what the reason why this has been so relevant is in Japan for the last 30 some odd years, you could borrow money from them at 0% interest. So what was happening is all the large VCs, hedge funds, everybody that borrowed money would go to Japan to borrow because it was 0% interest. They would take that money and then they would go buy assets with it because they didn't own any interest on those assets. So what ends up happening is last year, Bank of Japan decided to finally raise interest rates. I think they did it by like 25 basis points or 50 basis points. It was the first time in 30 years and the market lost its shit. So why would the market lose its shit over raising interest rates? Well, because for 30 years, a lot of these bankers and corporations and VCs were going to Japan to borrow money to buy assets. So what happens when they raise the interest rates? Now they owe more money to them. So what do? They sell the assets to pay them off. And so that's essentially what you've seen is this reoccurring issue, and it's been this overhanging fruit that's been in the crypto industry for not just crypto, but just general markets for the last year or so. What I'm hoping is this is also the beginning of the month. You have to understand there's a lot of Lux algorithms that run a lot of these trading platforms and stuff, guys. So this also looks like it could have been when the monthly start happened. So you can see this is the monthly candle. When that monthly start happened so bearish, I think what ended up happening too was a lot of portfolios got basically reshuffled and they basically sold off some risk because this is a bearish monthly close to them. All right. So this is something that would be automatically done. There's a ton of these algorithms and these different trading algorithms that are like really popular now. I tell a lot of the guys, even the guys that try to leverage trade, you're going to be trading against bots. To me, you're better off looking for ways to swing trade investments and not try to do day trading. This is just my personal feelings, because number one, these market makers and these exchanges, they have all the information they need to liquidate you guys, and they are not going to just roll over and let guys, take 100, 200x longs and think that they're just going to let those things run up and that they're just going to make all this free money from the casino. It doesn't work like that, guys. It's very, very, very difficult to leverage trade, and I tell people if you want to do it, you need to take it and approach it like a profession and a business. You can't just do it on the side and think you're going to be able to win and beat these markets, because These market makers are very, very smart. They've been doing this for a very long time. Not just them. We've also got this whole different dynamic that's in this market now, guys. People have to realize it's always been player versus player, but it's now like retail player versus institutions. And those people have been doing this for a very long time. They're very good at what they do. And this is something that people need to be very cognitive of. So right now, looks like we're getting a bounce. All right, and this is actually a good looking bounce right here, guys. I just started recording the video. You can see I've been telling my guys to buy these range lows. To me, what this looked like was a concession of a lower high. So we got the low right here, lower high, higher low, and essentially making market structure, guys. So then as this thing makes its next, this one comes up and it starts to make these moves. And they do this based upon liquidity, guys, and where certain levels are at with pockets of liquidity. All right, guys, you have to think too, these market makers, guys, they also knew that they just liquidated a bunch of people. So a lot of people got cocky and said, you guys already liquidated everybody, ain't coming back down here. So guys are taking out late shorts, and that's what you're seeing the results of, guys. Guys taking out late shorts and getting those shorts liquidated. There was over $400 million in shorts longs liquidated yesterday, guys. So they're going to liquidate the shorts, they're going to liquidate the longs. What your best approach to this market has been for the majority of people is to buy massive amounts of fear and hold and sell into massive amounts of greed, and then learning and understanding how these cycles work, and then understanding basic market structure, guys. And if this is all something that sounds interesting to you guys, you can click the link below. I promise you we can help you learn how to do this stuff. This is something that didn't make any sense to me, and I said, what did I say the other day, guys? Go watch the video. I said, this thing looks like it wants to do a bearish a bullish retest, or actually a bearish retest. Bullish for the guys that are holding alts. But it looked like it wanted to do a bearish retest to the 50-day before breaking down. What did we get? We got a bearish retest. Look what's happened. 27%. Alts are performing better than Bitcoin. Even though alts are down, you got things like Aave. This is down just as much as Bitcoin. Ethereum's down just as much as Bitcoin. So it's showing that there's obviously not this massive underperformance by alts. Alts have been holding up fairly well, even in the face of adversity over the last couple of weeks, guys, or last few months. Alts have done pretty well, to be honest with you. Speaking, I know a lot of these alts are way down from the local tops, but as far as them, most of the time with these markets, if Bitcoin goes down just 0.5%, alts go down 5 or 10%. To see alts, performing the same as Bitcoin just shows that there's actually a little bit more strength in the altcoin market than I think a lot of people want to admit to. So something else that I did not like was this. All right. So what this could be doing is a couple of things, guys. This is USDT dominance right now. First and foremost, it's at that level where we don't want it to close above. This could essentially just been a bearish retest of this, trying to reclaim it, and it can't, and then we start getting some relief on this thing. To be honest with you guys, I was really shocked to see how this market maneuvered last night, and you can see this is the reason why, guys. This is it. This is why. Remember, guys, price makes narrative. So whenever you get crazy price fluctuations, you're always going to see the price move first. The story always comes out next. I watched this happen last night, and I was like, what's going on? Because I always watch the U.S. futures market open on Sunday at 6 o'clock to get an idea of a read for the general market opening for the next day. A general rule of thumb is futures usually indicates which direction the Monday opening is going to be. When we started dumping, I was like, okay, something's going on. And then that's when I discovered the whole issue with the Japan carry trade unraveling again, and then the bonds going and surging up. But you can see this is what happened. We followed right along with this. So what I think happens is this, guys. I think market makers utilize these things as excuses to bring price levels down. They're going to mimic and follow behind the traditional markets, and then they get to push the gas and hide behind a bunch of sell pressure because they know other people are also, panicking at this time. But this is essentially what this looks like, guys. And hopefully right now we found a local bottom and we're starting to get that bounce. All right, guys. I didn't think this was the end of the market. The only time where I was concerned, again, we're going to have to make higher highs and higher lows as we go, on this trek. My main thing I didn't like was this, and then obviously it did look, so I looked at this the other day, and I had a feeling this thing would want to get filled. This is the fair value gap that it had on this 4-hour candle. You can see where price surged, and we broke above this 50-day like with some force, and I was actually really impressed on it. When this started coming down, I thought this was going to do like a bullish retest on the 50 and then start going up, but then when it cracked, you can see how much it pushed down. And just like, guys, don't forget, you know, just like they don't want the longs to make any money, they don't want the shorts to either, which kind of looks like what we're doing now is we're probably coming to get some of those late shorters that we're thinking, oh, okay, we're just going to roll over, I'll just make some free money. And it doesn't work like that, guys. The markets are very intelligent, all right? And you have to be hyper focused on understanding what's actually going on. That's why I tell people, if you don't know anything about macro, if you don't keep up with macro, you would have no idea what was going on in Japan. You're just seeing the market dump. Well, there's no way to be able to protect yourself or to be able to make decisions if you don't understand what's actually driving the market reactions and prices. And then equally, you need to be able to also, once you determine that, do you think this is going to be something that's going to be like a long term, like is this what's going to cause the next leg down? Are we just having a really nasty day? You know, these are things to consider. We also have to understand this, guys. What did Trump just say over the weekend? I will keep the stock market at all-time highs. I tend to believe him. All right. And maybe that's just not the smartest thing to do, but I tend to believe him because I understand how quickly these markets can turn just off a tweet. All right. Or just off of something. They can make bullish announcements. And a lot of times, guys, even with exchanges or even with projects and exchanges and these different like things in crypto, people hold bullish news close to their chest and they don't release it until the right time. It's just like a project launching. Projects don't try to launch in the cold periods of the year. They try to launch like in Q4, if you ever notice. Why? Because that's when all the attention comes into the market. All right. The same thing goes with events, guys. People and these politicians and market makers and all them, they understand how to hide behind events and push price action depending or not which direction they want to go. And the same thing with Trump and them, guys. Like, they already have this market fully prepared to go nuclear next year. Look at the things that they're setting up for. And honestly, guys, what's today? The first day of quantitative tightening finally stopping. So if you go back in history and you look at both times we've stopped quantitative tightening, go look at the Bitcoin chart and see what happened to it 6 months later. I mean, if you think that we're just going to go into a bear market and we're starting an easing schedule, then you need to go study liquidity cycles. It's just something you need to do. Or if you want to learn more about liquidity cycles, if you want to learn about the business refinance cycle and all of these things that really affect the market, well, then we have a solution for you guys. You can simply join Alpha Syndicate. I'm the founder of Alpha Syndicate. I've been doing this for a long time. I'm a macroeconomic expert. I combine this with fundamentals and technical analysis to try to help give my community a real edge over the market, period. We're also a group of entrepreneurs all working together, networking to level up. And if that sounds something like you're interested in, click the link below, guys. We'll see you inside.